History would show us that this kind of signalling we should take seriously, because at least last year was followed by the last RRR cut that we saw in September. But I do wonder, does it fix a problem of what has ultimately been lacklustre demand and dwindling confidence?
Yeah, quite right, Heidi. It's obviously a strong signal. It's a PBOC official being quoted by Xinhua, making the point that the central bank will support the economy through measures that include either intervening in the money markets, or they could, of course, bring down that reserve ratio requirement. The idea being there that it frees up liquidity for banks to lend into the economy. But to your point, though, this has been a bit of a long-running debate over the last few years with China's economy. It doesn't necessarily need cuts to shorter-term interest rates. The problem isn't the lack of credit. The problem, of course, is the lack of animal spirits to go off and borrow. Banks certainly have been on the receiving end of very cheap loans from the policymakers in recent months, and we haven't yet seen kind of major traction in terms of a turnaround for China's economy. So it's expected. It will, of course, be a welcome measure, but as you say, broader steps I think will still be needed to get the economy up and running. It does, though, it could mean, if it happens, that if the PBOC does ease the RRR ratio, it will bring them in line with the rest of major central banks around the world when it looks like we're heading for a year of policy easing. That was very different to last year when the PBOC was out there on a different path to the rest of its peers.